Hey there. Okay, this is a pretty simple formation. This is actually called the rectangle continuation pattern. Okay, and the way this looks, basically, is just show you a quick picture. First of all, you need to see an established trend. Okay, and then you'll start to see something like this. And you basically are looking for this kind of formation where the market goes sideways. Now, this is actually referred to as a consolidation pattern. Okay, this is in line studies forms is referred to as the triangle continuation. What you will find, and as you go through the module, you will notice that this will play, quite a huge resemblance to the Elliott wave analysis. Okay, so here, like this particular point will be like a sideways point. Okay, this will be like a sideways trend. This will be a sideways trend. Okay, and then eventually the market will stop and then reverse and go back the other way. Okay, so like here we've had three continuations, and then it should, by rights, by the third one at the end of it, should go back the other way. Sometimes it's four. Okay, but for the most part I think it's just for the three. Okay, so let's go ahead and show you what it looks like on the chart. Alright, here is your established trend. We're coming in from, starting to pull away, we're going up higher. Alright, and we're looking for basically, where the highs have basically equaled each other and the lows have equaled each other as well, and we can see some here. Don't worry about this breakout down the bottom, alright, but this one here is where we can see this at the beginning is too early in the trend. You can't really tell whether this is actually going to reverse or come back down, so you're going to need to take a look at some other areas as well and wait for that area to be broken before you could actually turn around and say, okay, we've definitely now in a trend reversal. Alright, because you'll have things like this, okay, and you would, as the market's coming down, you would feel that it's reached a certain point, and this area here you might want to go long on because it's broken your triangle. But what's happened is that the highs have been respected for a little while before the market decided to break from that channel. Okay, so you got to be extra careful. So when you've got this downward swing here, you're going to have some reactionary kind of, people coming in saying, okay, I want to go short, I want to go long, whatever they're fighting, and eventually the market does break and goes the other way. So this is the same kind of scenario here. We've had the market coming down and then it's trying to re-establish itself, and there was a break here, and then eventually the market did break that line and started to go up. So as we move along and follow the trend, and as it starts to develop, you can start to see that these sideways rectangles are starting to play, start to play a role here. All right, and the distance between here and there, okay, is your TP target when it breaks. This one is only about 1.5, so you do it to around about there. All right, let's see what happens. So we've had probably, I'd say, one, two, yeah, we've had about three continuation patterns. This isn't really a sideways trend, so that's not really anything. So that's the sideways, that's the move from that sideways trend, and eventually the market's just basically stopped, found the top, and it's reversed. But these are best. You can see I'm on the 30-minute time frame here. You're not going to see a lot of consolidation patterns, continuation patterns like this in larger time frames. As you can see, they're basically, there's a lot of ranges in them. You get, there's a couple of areas here where you've seen basically it's where it's gone sideways and eventually gone up. But that area there is actually a demand area, which we'll talk about a little bit later. Alright, so yeah, it's pretty hard to find on larger time frames, so we can go down to smaller time frames and you'll actually see these take shape quite often. Alright, here's your established trend. The trend was down, it's going sideways, and then eventually it breaks. Okay, So there you have it. There's not really much more to talk about really. It's just a sideways trend, and when it breaks, you take the side that it breaks on. But again, be a little bit more cautious. Don't just go based in on that signal. Try and use some others in conjunction with it. Alright, so I'll leave you with that video, and I'll see you very soon in the next one. Bye for now.